Welcome to Seeking Alpha's Alpha Talks Editors Roundtable. What moved markets this week? The week ending Friday, Feb 5, 2021. Another very eventful week, which one could perhaps term the Empire Strikes Back, if we're keeping with the Star Wars theme here, as the Wall Street Bets crowd saw some of their favorite stocks, in particular GameStop, sell off pretty significantly. It has recovered somewhat here on Friday as we record this at noon, but that overshadows what is a positive week for risk assets. The S&P is up every day this week so far, and stocks are on track for their biggest gain since early November. I am joined by Brad Olesen, VP of News, and Stephen Alfer, Managing Editor of Breaking News. Kim Khan is off this week. I am your host, Nathaniel Baker, Senior Editor of Strategic Contributors here at Seeking Alpha. So let's start with Brad to give us the big picture view of what's been going on.
Right. So it was definitely a risk-on week. We had a lot of stimulus overhang, which looks like it's trying to get a little bit resolved. And with that, you saw a little bit of the defensive names, some of the COVID-oriented names kind of struggled this week. Clorox warned in their results into the second half of the year. Church & Dwight, which is a provider of a lot of sanitary devices, also a little bit weaker, and real estate also struggled this week. You had names like Vornado and SL Green, which are struggling on the back of the rising treasury yields, which is usually a good sign for risk assets. People are becoming a little less defensive in their orientation. Notably, the 530 spread and the treasury yield was steepened to this highest level since 2015. But obviously we can't ignore the elephant in the room this week. You know, we had a lot of Wall Street the Wall Street Bets names take the brunt of some of the selling. Even though we were higher this week, it was largely a very strong week for equities, but GameStop notably down about 70%. And then you also had names like Tootsie Roll, Bed Bath & Beyond, AMC, National Beverage, which is FIZZ. Those were all down about 20% or more. I just mentioned those names because yes, it was a good week for the markets, but there were some interesting losers of the week. But on the winner side, I think notably COVID is kind of waning a little bit, but Novavax, provider of one of these vaccine candidates, has doubled over the past week after positive data. Keep in mind, it was an $18 stock back in May of last year. It's now a $300 stock. So you don't have to have GameStop in the name of your of your company to see stellar gains. And I think that's just kind of emblematic of where we are in the vaccination process and COVID more broadly. Daily rates, I think, in the US are down to about 120,000 from 200,000. And another big winner this week was Expedia, which is they were up about 12% on the bullish optimism for travel to return. Wedbush notably said that there's an expectation for a lot of pent-up demand. So, a lot of optimism this week with the stimulus and with the reopening. And that's nothing to say of where we go in the administration, which has been notably positive with regards to marijuana names, which were also really, really big this week, helped by a mega M&A deal with Jazz Pharmaceuticals spending $7 billion for GWPH, which lifted a bunch of other names.
Yeah, where do we see things now with the Wall Street Bets? I touched on it at the top of the show. The Empire Strikes Back. These guys kind of had their faces handed to them a little bit here. Now, some of the buying was still restricted on Robinhood and to the extent that people are still using Robinhood. But it seems that a little bit this story is closer to the end than the beginning. Like it's almost very quickly faded from your CNBC and the other kind of talking spots. There's still quite a bit of chatter about it on Twitter, of course, but it does seem that this is all passed us by already. Or is that wrong, Stephen? What do you think?
Well, some of it passes by. I mean, online message boards are an old story. I mean, they were moving stocks back in 1995, right at the start of that massive bull market. So that's not going anywhere. Folks getting together now, it's done online and discussing names and flagging ideas and maybe even some illegal shenanigans going on too. That's not going to stop. They got a bid out over their skis this week, saying they were going to take silver to the moon, and silver is not GameStop. It's a much bigger, deeper market, and they were, they got a little pop Sunday night and Monday, but really weren't able to do anything. But the kind of the message board phenomenon, the Reddit phenomenon, probably isn't going anywhere.
Right, but to the extent where they can bid up a stock 400% or whatever it was.
Well, they can still do that with certain thinly traded names. I think there was another name I can't recall it yesterday was a dollar stock at the start of the day, and it got mentioned on the Reddit board, and it was $17 by the end of the day. It was a very kind of low float, low market cap name, and that got bid up.
Yeah.
Still possible.
Forgetting all of this, we also had a jobless claims yesterday, and the job gains. What do they call it? The non. There was also a bevy of earnings. And Stephen, I know you'd like to cover that. So what else were you watching there?
What stood out to me this week was PayPal. They had a big Q4. They had very solid guidance. I think the stock's proven itself a winner in the COVID world and in the recovery world. It just keeps going up. They keep getting bigger market share. Their Bitcoin offering is just out the door, or just doing very well. Dan Schulman, the CEO, in the earnings call noted that the folks who are using Bitcoin are twice as likely to use the PayPal app, or twice as likely to open the PayPal app as other users. He says we're building a super app here. Another big offering of theirs is the BNPL, buy now, pay later. Again, soaring usage from that. Schulman's interesting that he talks about user engagement, and that's usually something you see more from a social media CEO than a payments app CEO. But I think he gets it, that he's kind of combining the two.
All right, let's move on to the second and final segment of the show, where we discuss the favorite stories that many of which we've been involved with from the editing side or otherwise. Brad, why don't we start with you?
So just touch on a couple real briefly. I think Stephen alluded to the silver story, which I thought was rather interesting. Huge pop on Monday as there was this understanding that the Wall Street Bets crowd was going to get behind the silver trade. And then that idea bubble was quickly popped as people realized, like Stephen said, it's a lot deeper, and not to mention a lot of hedge funds are actually in that on the long side. And so you wouldn't really be doing much justice if this was your campaign to wage war against the hedge fund elites. And so that's petered out. Now silver's trading below where it was on Sunday. So one of the biggest moves that it's had in quite some time just completely dissipated. Silver briefly touched 5 months highs, and now that's gone. I think another interesting story is sort of on the earnings side was Match Group, which owns Match.com and Tinder. I only mention them because they were, it must be hard to date in the pandemic. They struggle with some of their results, but it's interesting in the fact that you have Bumble, which is a very highly anticipated IPO, which is coming down the pike. An analyst this week just said that they expect the date app to probably reach twice the value of its current IPO price. So I think that's something to watch in the future. And if you're not familiar, Bumble is where the woman has to reach out first before getting solicited by any potential suitor. And another quick earnings story, I think Amazon, right? Bezos conveniently chose to leave the major e-commerce giant when they hit 100 billion in revenue, and not just a couple of weeks after his number 2 decided to leave the company. I think he had fond words for that departing executive. So just kind of goes out on top, reminds you a little bit of George Costanza.
I think the SPAC story is still fascinating to me. Our new SPACs IPO editor this morning, Jerry Cronenberg, did a really good article on Alex Rodriguez is now sponsoring a SPAC.
You stole my story. All right, go on.
A-Rod. I won't get into the wordplay with that, but that it's bubbly stuff. I said this last week. There's a lot of interesting SPACs with really good sponsors and really good underwriters, and then there's ones that tell me we're in a bit of a bubble. But again, SPACs are like a really good idea, and like any good idea on Wall Street, it just gets taken to extremes. It gets taken to bubble levels. And, Brad was just talking about the Bumble IPO. The IPO valuation, they're talking about 6 billion. And an analyst was saying, well, it's probably going to jump up to 12 billion after the IPO. Well, there's why you have SPACs. Why should the early investors, right, let the underwriters, do it at 6 billion when on the first day it goes to 12 billion? They just left a lot of money on the table. And one of the reasons SPACs are growing in popularity is to kind of close that gap or get rid of that left money, that
Right,
money.
but you have direct listings, right? There's direct listings if you wanted to go that route, and that's getting a lot more of attention. I think what was interesting, there was some SPAC this week where I think it was that short seller call on Clover Health where they pointed out that the sponsor was due to make something like $200 to $300 million just for marketing the name over the course of his, just to be a name, to bring this company public. And here's a $300 million award. Not the fact that, he may be worth it, but I think that's an incentive that's also driving a lot of these things. These strong stewards, these big names, helping to elevate some of these private companies to the market is worth something. But you can't help but wonder, follow the money, right?
Yeah, this begs the question how much A-Rod is getting paid. I mean, talk about a guy that proves that there are indeed second acts in American life. I mean, this guy has resurrected his image quite convincingly. Whether one should buy his SPAC is, of course, another question entirely.
Right.
All right, on that note, let's wrap for the week. Thank you all for watching and listening. Remember, if you're listening to the podcast, that you can get the video of this somewhat shorter than the podcast, which airs at 4 p.m. on Friday afternoons. seekingalpha.com/videos is the place for that. And don't forget to get the podcast by signing up for the Wall Street Breakfast, not Wall Street Bets, podcast on any podcast software. And this airs on Saturday morning around 6 a.m. With that, we thank you all for watching and listening, as the case may be, and look forward to speaking to you all again next week.